Hey, welcome back, everyone. I hope you're all doing fine and well today. And happy new month, right? So, last month ended with a massive bump, especially on crypto, in the crypto market, in the commodity market, and in a couple of the currency market as well. We saw some very big tractions, okay, especially from the likes of the dollar pair. It was a very big blow in the market. So, today's video is going to be very brief. Number one, because I have a match to watch. I have a Arsenal match to watch. And secondly, because I'm in a lot of positions. Okay, most of them are doing very well. And only my indices positions are still going through some dynamics right now. So like Nikkei right here, like I said in my previous video, I said I would actually love to buy Nikkei around this particular region, and it seems like it's probably gonna get there. All right, because I'm still very bullish on the Japanese stock. All right, so especially the Nikkei. So we see how that goes. Okay, what is this? Okay, the flash sales, whatever. I'm not interested in that. Okay, so back to what I was discussing. So I would still have to buy Nikkei around here, and extremely, I would also like to buy around this region also. Okay, there's a demand here. There's a demand here as well. So let's see how Nikkei goes moving forward. And the other indices that I'm still holding that seems to be going through some emotions right now. It seems to be going through it. Okay, is Nasdaq. Okay, Nas 100. You can see right here. I took a buy here. That was a buy here. And last week, Wednesday or Tuesday, I took another buy right here. Both of them ran the all three position ran very well in the first till Thursday. Okay, then on Friday the market just torpedoed back down. So one of them is in a little bit of a drawdown right now, but potentially I'm willing to just hold this trade because we know what's going on in the market right now. In the US stock market, when we talk about the tech stocks are going through a little bit of a drawdown right now, considering the tariff uncertainties, okay, and few other things that I don't really want to get into because I want the video to be short again, okay. But those are the three, I would say, those are my indices position that seems to be going through some dramatic turns right now. Although I have some trade recommendation that we can also kind of like tag as part of my trade position, the kind of trade I have open right now that I'll still probably recommend because I'm also looking forward to add to those positions. All right. Before we get into all of that, all right. So let's just take a look at the fundamentals. Okay, as usual, I'm just gonna brief through this. I don't want to go in details because there's no time again. Okay. So now we have on Monday we have card bank holiday and the United States bank holiday. That's fair. All right. That means Monday we're probably gonna get some pullbacks. Maybe little to no tractions or momentum on Monday. So let's pay close attention to that. On Tuesday, we have the manufacturing PMIs. Okay, in the United States, is actually expected to kind of like to get a little bit robustic. Okay, from what we got in the previous month, which is 4.8, we are 48.0. We are expecting 48.9 from the manufacturing PMI in the United States this time around. If this happens to be because last week I think we got a very decent GDP in the United States. Let me see if I can get that for you real quickly on on the United States economic heat map right here. We got a very good reading on the GDP last week. We got from what was being forecasted, which is 3%. We got 3.3%. That is very good. Okay, that is very good. So taking a look at the United States economy right now, aside the labor market that is still going through it, okay, is not very stable at the moment. The inflation is still pretty sticky. Okay, we have CPI at 2.7%, still far off the target. PPI at 3.3%, still far off target. PCE at 2.9%. Literally, there is no confidence yet in when it comes to the producer and the consumer and how they perceive the US market or the US economy at the moment. As a matter of fact, there is a little bit of a controversy going around that US economy is going through or is on the way to recession or whatever. I don't want to venture into that, so let's just keep it as it is. Focusing on the data we have right in front of us, I just go at it. You know what I mean? So the wage growth is still pretty decent, but 3.9 is not what we want to see. We want to see around 4%, 4.5. Okay, unemployment rate is still the same. Okay, like I said, the US labor market is not feeling super robust at the moment. But when it comes to the production and the local business and just the economy itself, how robust the economy is, how big the production, the service in the United States is right now, you can see that we are getting some contraction as well, especially from the service PMI contrasted. All right, it's still below, relatively below 50, because we are seeing 50.01 compared to what was being forecasted. Okay, that is not good. Okay, when you take a look at the manufacturing PMI also, don't forget manufacturing PMI, service PMIs. Okay, you can see the market was forecasting 49.5 in the previous month, and then we got 48, which is like negative 1.5. That is not super good in the United States again. So when you take a look at everything, when you put all the data together, it is not looking super good for the United States. All right, and you can kind of like attach that to what we've seen so far on DXY. All right, right here on DXY, you can see the nosedive. Okay, it is not looking like something that would go up anytime soon. Okay, when you put the economic data and the actual technical data together, they are not looking super good, and that is why I'm currently like shorting, like mildly shorting the dollar against every other pairs in the market. So that is just where I'm at right now on DXY. So let's quickly talk about DXY, and we'll go back to the economic calendar, then we're gonna wrap it up with top setup. We're gonna do recommendation, and then wrap everything up today. So DXY right here, based on my data last week, the analysis still remained the same. I'm still expecting the market to come back to 97.102. Then possibly we're going to get a flight to the upside from there. Okay, because definitely this week we're going to be getting NFP this week. We're going to be getting some labor data this week: ADP, JOLTS, NFP, unemployment rate, the wage growth. We're going to be getting 5 actual serious data this week. Wait, let me quickly check, because sometimes it gets postponed. Yes, we are getting them. All right, we're getting them this week. You can see on them, we're getting average hourly earnings, which is the wage. Okay, the wage growth. We're getting unemployment rate. We're getting non-farm payroll. So those 3 are already certain. We're also getting ADP, non-farm employment. So we're getting ADP. We're also getting unemployment claim on Thursday. Yeah, we're getting JOLTS also. So we are literally getting everything we used to get on every month from the United States. So that is very decent. So let's come back to the chart real quickly, because I'm still going to go back to the economic calendar. I'm going to just wrap it up there where I started earlier. So now the plan is to see if we're going to get the market to retest 97.102, and possibly we're going to get a rebound from there. All right, possibly. If that failed to happen, and then DXY ended up doing what? Ended up breaking all the way to the downside right here, and we get something like this. I mean, 94 is in view, in my personal opinion. I mean, we could get 94.66, like very, very easily in the next couple of weeks, or even in a month or 2. Okay, so that said, we have to pay close attention to the data coming this week, because they're going to set the tone for what the CPI is going to be like or look like, what the PPI is going to look like, what the PCE and every other data that's coming this month. I mean, this coming month, which is September, are going to look like. And then don't forget, we're also getting the Fed's actual rate cut this month. I mean, this coming month, September 17th. We don't know if that's going to come through, because I mean, Fed Powell said yes, they might, but we are not sure if it's going to happen. Okay, until it actually happen, all we've got is just sentiment. All we've got is just a statement. Okay, until the data actually comes out, then we can now be rest assured that it's going to happen. There's so many times that some of the Fed, maybe Waller will speak and be like, yeah, we're going to cut rate, it's in view, it's going to happen. And then FOMC meeting, it comes out, or will come out and be like, nope, it's not happening. Labor market looks good, blah, 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 blah. I mean, it's the way it is in the market. So we have to I personally love to wait for the actual data to get released before I start putting anything out there, because, number one thing for me in trading is just to protect my capital at all costs. I don't care. Okay, I just want to do what? I just want to protect my capital at all costs. So that is just my view on the dollar index right now. I'm still largely bearish on dollar index. Okay, I'm still largely bearish. But whatever happens with the data coming this week, then moving forward, it's going to set the tone for what to anticipate. All right. But first off, I would personally love to see 97.102 getting retested first off. If you now grab some momentum there, okay, because there is a clear demand zone right here, another demand zone at 95.50. Okay, we have 2 demand zones closely together, literally. Okay, we've got one here at 97, and we've got one here at 96.50, 96. So there are 2 potential places or region that we could get dollar strength back, okay, potentially. But let's see how it goes next week. All right, that's all on DXY. Now let's go back to the economic calendar. where we just wrap things up. Like I said, I have a match to watch. So on Wednesday, we have the Australian dollar GDP, the quarterly GDP coming. It's expected to kind of just come robust. I think I see this coming actually, but we're going to have to wait to see how the data looks and how it's going to interpret in the market, how the market's going to take it before we now go ahead and start, making decisions or jumping the ropes. And yeah, we also have RBA Governor Bullock speech, and then we have the jobs job opening, just expected to come pretty low. The jobs job opening is still coming low. That means the labor market in the United States is still not where it's supposed to be. Why? Because inflation and interest rate is way too high. So institutions, companies, conglomerates, they have to cut down their own expenses so they can pay all this interest rate on all their borrows, or all the money they've borrowed, all their loans, and they also have to reduce their workload because, they have to pay some of these people that they employ, they have to pay some of their loans as well, the student loan, blah, 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 based on the deals that they made. So they have to cut down all these expenses, and that is why we're getting the labor market getting smacked in the face at the moment. Okay, so that said, I'm not super excited or probably like expecting anything serious from the JOTS or even the ADP which is coming on Thursday. And you can see the unemployment rate and the unemployment claim in the United States is still expected to probably come the same. So we're not really expecting anything significant from the United States labor market. Even the ADP non-farm payroll is expected to drop drastically from 104, which is previous, to 71K. That is awful. All right. So if all this data come just as been predicted, we're going to get a bigger drop or more like a decent drop in DXY. Okay. So pay close attention to that. Labor market is getting smacked right now and it's not looking good for whatever reason. All right. Although on Thursday, 3 p.m., we have the PMI, service PMI in the United States coming. So it's expected to come slightly higher. This is still not good enough. As a matter of fact, I'm not expecting it to even come like that. Probably we're going to get a lower number. Probably. All right. Probably. So we're going to get a lower number. So nothing is also certain on that one either. So we just have to watch and wait right now. Lastly, on Friday, we have the card employment change and unemployment rate. Last week, we got some very interesting data on the Canadian dollar. Okay, I think it's the quarterly GDP. I don't want to go back because I don't really have much time to waste. Okay, to spend with you because I would love to spend so much time. But let's just see how this goes for the Canadian dollar come next week. I think the data come actually very good. The GDP come very, very good. So I have one or two things to say, but maybe in another video during the week, I'll probably put something out there about the economy, literally. But let's just go ahead with what we have right here on the chart. On the calendar. So, and unemployment rate is expected to come higher. That is bad. Okay, the tariff is actually eating Canada way more than what was being expected. Okay, and the interest rates in Canada right now, I genuinely don't know that. You can imagine the interest rate data. So let's check it out. Interest rate data in Canada. All right, let's see what it looks like. I think it's been a very long time since they also cut rates. Yes, it's around 2.27%. It's not bad actually. Okay, but for the size of their economy, I think it would be advisable for them. Probably they're going to cut maybe 25 basis points to level it all the way down to 2.5%. All right, maybe, especially if Feds end up cutting their rates, they might also go ahead and cut rates as well. I'm talking about the Bank of Canada. All right, but right now nothing is actually sure yet. So what we have right now is that the unemployment rate is expected to come very, very high. Okay, higher than previous. And if you get anything above 7.0%, that would be very bad for the Canadian dollar. Employment change is, it's expected to come high. I don't know how that's going to play out. I really don't. But let's see how it goes. I don't want to put too much data out there and everything just get messed up. When we get the actual data, we're going to talk about it. Now, lastly, on the average hourly earnings, you can see it's expected to come almost, just as previous. No increment, no decrement. As a matter of fact, maybe this is just a plain safe kind of data from the analyst. Okay, just like whatever happens. Let's just put this one out there. Okay, that's why I feel, because I would probably consider a more lower reading, maybe something like a more softer point, like a lower reading on this particular average hourly earnings, maybe around 0.28 or 0.25 thereabout. But let's see how it goes. Okay, let's see how it goes. Non-farm payroll is expected to come as the same, and then as expected, unemployment rate is expected to come higher. You see where I'm going now? The labor market is not looking very good in the United States. So pay close attention to all of these as they all go unravels this coming week. Economic surprise middle right here, you can see the US dollar is 45%, pretty weak. Pound is 71%. Both the United Kingdom and the United States are they're dealing with a very stressful and tiring inflation right now. So I get why pound dollar is not really making that move like euro dollar and a few other dollar pairs are. None of them are actually making serious move because the whole economy is kind of like messed up. The whole tariff thingy, the Russia, EU, Ukraine, all these things are very, very dicey to actually lay a finger on right now. So I see why that is happening. Europe 50%, Japanese yen 56%, NZD 63%, CAD 50%, Aussie 57%, Swiss 43%. So averagely, they are just 50. Everything is just average right now. And you can see this is why we're getting more like a range on the dollar pair range. Okay, euro dollar wasn't going anywhere. It hasn't been going anywhere since last month. Okay, the same thing on pound dollar, the same thing on Kiwi. I think Kiwi was just dropping actually. Okay, it was more bearish than few of all this other pair. Okay, the same thing with Aussie dollar as well. Kind of like just bearish. I don't know why, but it is the way it is. Okay, although I'm buying Kiwi dollar though, I'm still gonna talk about that as we move on. So that's what we have right now on the economic calendar. However, on the top setup page, we have gold still very bullish. It is called 13, right? Still haven't figured out how to really write this line very well. Gold very bullish, score of 13. Silver very bullish, score of 10. Euro dollar bullish, score of 8. Aussie dollar bullish, score of 5. Right? That is very good. Now we talk about the trade I'm holding. I'm holding gold buy. I'm holding silver buy. I'm holding EU buy. I'm holding Kiwi buy. I mean NZD dollar buy. I'm not holding EU dollar. Maybe I missed out on that one. But right now I don't really have anything on it. I don't really like the pair like that, so that's fine. CAD yen is one of the pair I will be recommending short on today. Eurojpy potentially is good for short. Eurchf, yeah, is one of my trade recommendation. I would even say CAD yen and Eurchf are more like the only trade recommendation that will be fresh. That will probably be introducing to you because I'm holding US dollar Swiss short and dollar yen short. CAD CHF is already at the all-time low. You don't want to sell all-time low. Please don't. Okay, but if you must, go ahead and have fun with it. All right, so that said, let's go straight to the chart and let's make some very good money together, possibly. Okay, so on DXY, we've talked about DXY. Let's start with Kiwi dollar. All right, what can we make out of Kiwi dollar this week? Number one, I'm already buying Kiwi dollar. I took a buy right here. I took another buy right here. Okay, I have two positions on Kiwi dollar, just so we're clear on that one. And right now, you can see we have one. I told you that it seems to be the only pair that is on like a bearish trajectory right now. And this is the daily time frame for God's sake. Okay, so taking a look at this. All right, so based on NZD, based on the trajectory that we have right here, I have a friend that's actually shorting NZD right now. He's shorting NZD dollar. He's shorting USD CHF. He's shorting USDJPY. He's a pure technicalist. I mean, when you talk about someone that only trades technical analysis, it is that guy. All he does is just look at the trend and he just trade the trend. That is all. Because if I don't have any idea what is going on in the US economy or I just don't care about it, I will probably be shorting NZD dollar right here. Or maybe I will expect for it to retest this particular channel, the upper band of this channel. You can see we have a channel right here, right? Yeah. So I will expect it to retest this upper band, the upper band of this channel, and I will be shorting from there. Okay. But I don't want to do that because it doesn't make sense to me. Why would I be shorting NZD dollar and at the same time I'll be shorting dollar yen? There's no sense in that for me, literally. But this person that I call my friend is a very good trader, does really well, makes serious money. So I believe his judgment when it comes to the technical analysis perspective. But fundamental is questionable. So move back to what we're talking about. So NZD dollar, I'm holding a buy. I would like to see the market actually touch this particular region, this upper band of the channel. And then whatever happens from there, we're going to have to figure that out together. Maybe it's going to come back down very fast like it did here, and it did here. Also here, because you can see the trajectory to the upside is not as cool as it is to the downside, okay? It is slower going to the upside. It is faster here, but it's pretty slow here. But coming to the downside is very, very fast. So maybe we're going to get it to this particular region right here, okay? This 0.5940. Okay, and then the market will just do what? Just come back down again. I'm not sure, but what I would recommend to you this time around on NZD dollar is probably just anticipate a short-term buy. Alright, a short-term buy. You can even wait for a potential pullback to this region on the 1 hour time frame. Okay, and then look for a buy to the upside right there. Once it gets to this place, you should have made like maybe 1:1, 1:2% profit, and you can get out. Okay, you can get out. I wouldn't advise a short around this region yet until we get a very good reaction on the daily. If we get a close of candle that looks like this on the daily candle, or we get something like this that looks like yeah, I think is it morning star or evening star, I can't really tell, but it's a very decent candlestick pattern, then you can take a short trade right here and anticipate from that target all the way down to this particular region. Okay, but anything outside of that, I will consider buying, okay, to this region first. Now, if I'm going to further my bullish or my buy trade on this, I would like to see a break above this particular high, which is, we have high, low, high, low. We have this high actually got destroyed, so this high doesn't make any sense anymore anyway. So we have a high, we have a low, we have a high, we have a low. We get this particular high, which is the previous high, getting destroyed to the upside, and now we get it retested. This resistance now comes to support, then I would consider buying further. Okay, that would be a good one for me. Anything outside of that, I would probably just short NZD dollar moving forward. But right now, I'm holding it back until I get a break above here or a close below here. All right, so that is just the plan right now on NZD. A break above here like this, or a close below here like this. Okay, there is a lot of potential on this one, so pay close attention to it. Which other one? Euro USD. Anything looks good on that one. I'm currently waiting to buy on euro dollar, so let's just be clear on that one. Number one. Number two, you can see the trajectory of this one. It's pretty bullish, right? But right at the top here, we found it very hard to kind of just break below this high. Okay, so we got a more like a bearish trajectory, like a three-wave corrective move. All right, because we've got some very good moves to the upside. 1, 2, 3, 4, 5, and this one just got extended, so we're just gonna call it 1, 2, 3, 4. All right, maybe we're gonna get a fifth wave to the top right here, then we get that corrective wave to the downside, something like that on the dollar. But let's just pay close attention to that. Okay, I don't want to go too crazy on that really part. Okay, let's focus on the price action, simple demand and supply zone. Let's do that. Makes it more easier to understand. So moving forward, if we get a break above this particular high, then we can now be rest assured that yes, this might actually go up, might go higher, and we get that the fifth wave that we've all been anticipating for potentially. Okay, but anything outside of that, I would consider just chilling. Maybe we're gonna get a break. The retest of this particular region is 1.1825 thereabout. Okay, 1.1825. Get that. Maybe we're gonna get a reject from there. I'm not sure. I don't really know the full plan on euro dollar right now. Okay, what I do know is that it is bullish. Number one, we have decent higher highs, higher lows. What I mean by bullish. The second thing is it is getting lazy to continue this bullish momentum at this particular top right here, which I would probably consider a range. All right. So whatever happens above here and what happened below here will determine where it goes to moving forward. Well, as you know me, I'm a swing trader. I hold trade for a long period of time, so I will probably just watch this how it goes. But as it stands now, I'm bullish on euro US dollar. I'm buying. I'll keep buying until this particular demand zone got destroyed to the downside, and this particular low also get destroyed to the downside. That is when I would probably consider shorting euro USD. Okay, so just so we're clear on that one as well. Pound USD. What do we have on pound dollar? Pound USD. Also very lazy, but on this one, okay, aside the fact that yes, we're also very bullish, it actually has a very similar move, like that of euro USD. Okay, I'm also buying this one. I took a buy here. I took a fresh new buy here also yes on Friday, I believe. When it dropped, instead of trading, so I just took a fresh buy. All right, very small lot size, so you know how I trade. So that's just how it goes. Anyways, the plan here is very simple as well. I want to see a break above here, above that 1.3050. We get it broken. 3550. Excuse me. We get it broken to the upside right here and wait for pullbacks, and then off it goes to 1.3. I think 3900 is in view. Okay, 3900 is actually in view. So let's pay close attention to this one. The pound dollar might really be a good one. Okay, so let's pay close attention to it. Again, pound USD, everyone. USD JPY. Okay, dollar yen is lazy at the top also. Okay, it is bearish trajectory for a long time, and then it started moving back up. So if you take this on a weekly band, seems like a very good bearish wave that seems to be correcting right now. But whatever happens at the top here and at the bottom here will determine how I approach this moving forward. I'm currently shorting. Why? Because dollar is weak. Yen, the Bank of Japan is planning to create, all the ocean banks that surrounds the economy. So I'm considering shorting dollar yen at least back to 140 region right here before we now get maybe a potential move to the upside moving forward. right? Because I can never be bearish on dollar yen. It is not possible. I'm talking about long term, like a positional trading concept on this one is bullish. It can always be bullish. DJ, Euro J, Dollar J, all the J's, they can always be bullish because the yen, we always try to make sure that the currency, what I mean by yen is the Bank of Japan, will always make sure the currency is not too strong. So it doesn't discourage investors, it doesn't discourage production, it doesn't discourage, the purchasing power that they're trying to reduce. They don't want a harsh currency so that it doesn't reduce their manufacturing and their business perspective of the economy. All right. I'm very sure you know what I'm trying to say. So that is just where I stand right now on the dollar yen. Not too strong economy, not too strong currency, I mean. But then right now, dollar is not looking very good. So the yen could actually take a break from being the most bearish currency in the world and get some momentum, rate hike 1 or 2 times, see if we can get 140 region retested. Whatever happens after that, we see how it goes, okay? Well, I doubt if the 140 region would ever get, taken out. I don't see that happening, okay? I mean, this particular region right here getting taken out, like getting destroyed, and then we now see the market at 128. I don't really see that happening, but let's see how it goes, right? It's very possible. 128 is very possible, but I just don't see it happen yet. Until maybe we break below here, all right? Then that could be a possibility. But until then, I will stay cool on the dollar yen. So let's jump to the likes of gold. Before we jump to gold, let's talk about my USD CHF. I'm shorting USD CHF. Okay, I'm shorting USD CHF. It's a very decent one. I think I only have one position on this one. Okay, so let's see how this goes. It's a short-term kind of trade, right? Awfully low. So I don't really want to go into this one feeling like a champion. I want to go into it feeling very cautious. Like champion, I mean being oblivious to the particular low that it is right now. Okay, so it's very, very low. So maybe we're gonna get a retest of this particular demand zone or maybe support region. Then the market will just operate it back to the upside, and then probably range for the next 3 months. And then whatever happens, we'll see how it goes. Okay, but right now, that's the only thing I have. I just want to short it back to this place, this region right here, and we'll see what happens after that on USDJPY. However, if that supply zone is broken to the upside, then you can see this multi-year low right here that got destroyed somewhere in May. We'll probably get it retested again at 0.8400. All right, 0.8400. Probably gonna get it retested again. But anything outside of that, this particular region still owes the price to the downside. Okay, this particular supply zone right here. Then I mean, the sky is the limit on the CHF. So keep a close tab on that one. You can join the short and just target the 0.7930, this particular region right here. Okay, 0.7930. That's that. WT high with the increase in supply from Saudi Arabia, India still trying to purchase more oil from Russia. I think there was a statement I read about that this morning. I read about this morning. So we're gonna see how that goes. Okay, I think India is now defying the United States hegemonic rules and instruction. So we see how it plays for India. But I think India can take care of themselves, I believe so. So let's see how they play the game. It's going to be a game. It's going to be a very nice show. I'm just enjoying the whole economic trauma and drama that's going on right now, genuinely. And I'm just taking calculative risks and just enjoying the show, genuinely. It is very interesting. It is very fun if you understand how the whole thing is being played. All right. So that is what I'm doing right now. WTI, still have a short position right here. I think I added another one right here on Friday. So let's see how this goes. Potentially, we're going to get it back to 60.50. Potentially. If that is taken out, then we are heading towards 55.20 right at the bottom here. That is my target. That's my overall target on this one. That I'll probably just close the trade. All right. But anything outside of, don't forget, I took a buy right here that caught me that very good profit right there. Very early in June. I mean, very early in June, yeah, literally. Something like that. Okay, so I didn't show this one anyway. This is when Trump is playing the whole dramatic game with, this is the Iran and Israel war. Yeah, that was Iran and Israel war. Okay, that short-term war that kind of happened around 2 weeks. Yeah, that was very good. So let's see how this goes. See how I draw on the chart. It's very weird and fun. So looking forward to a further sell-off on the WTI. I've seen so many analyses. And it kind of like just makes sense that everybody seems to be short in WTI. So let's see how this goes. Okay. economically, technically, fundamentally, sentimentally. Kind of just makes sense. Okay. I mean, let's check the retail sentiment on this one. Okay, market sentiment, the retail sentiment on WTI. All right, I'm going to show you when that loads up. All right, so that's that. On gold. US oil. Okay, let's take a look at the retail sentiment on US oil right now. This is US oil right here. Okay, this is US oil. You can see we have more buyers. I love it. Now, when it comes to retail sentiment, I love to go against the retailers like myself. Okay, because I know most of us don't really know what we're doing in the market. We're just playing ping pong. Okay, so I love to go against the retail traders. When they are selling, if we have more sellers than buyers here as a retail trader, I wouldn't have taken the trade, honestly. I would have just said, I'm not going to touch it. But the shit is good. I really want more buyers. Okay, I want to see like maybe 70% buyers of US oil on the retail sentiment, and then I'll probably add on to my short trade. Yeah. That's how backward trading can be sometimes, when you're going against some people, because you know that most of the time they get it wrong. Okay, so just kind of capitalize on that. It's just the way it is in the market. If you know how to play the retail sentiment data very well, it works like magic. All right, moving on to silver. Silver looks good. I took a buy right here. I'm still holding this one, and finally silver comes to 40. I mean, this is something I've been waiting for forever. I took a buy here. I closed it. I missed out on that one, and I just hang on to this one that I took, and I don't want to let go now. I took 2 positions actually. I took 2 buys on gold. I took only a single position in silver because silver is more violent. Lately, it has been more violent than gold, so that is good. If you want to take a fresh trade or a buy on silver, I wouldn't suggest a short trade on silver. All right, if you're anticipating for a trade on silver, I would probably consider a buy opportunity. Okay, simple stuff. Okay, that you know that I do very well. Ctrl Z, wait for a pullback to this region. Let it grab some momentum at 38.80. Okay, 38.80. If you get a rejection from here, then you can look for more buys. All right, that's number 1. Number 2, potentially it doesn't get there. Wait for it to come back to this region. Okay, we test this particular broken supply zone right here. That should be around 39.60. Okay, 39.60 is good, and then 42 is the ultimate target right now. That's where we are going to on silver. So pay close attention to that. You might get it. All right, so that is that on silver. Right now on gold, I'm very close to the end of today's video. On gold, gold is beautiful. Gold is just so beautiful. Like I said, I took multiple positions on this one. Like this is very, very cool. One of the best right now. And you can see what to anticipate for on gold. If you want to buy gold, wait for the pullbacks. Okay, the pullback to 33.80. All right. Yeah, 33.80 right here is a very good one. And space for 3,500. We're still heading to 3,500, which is the previous all-time high on gold. So if you get that, fine. If it doesn't get that, I mean, probably we get a break above here, a pullback to be testing 34.40, and then maybe the market will not fly. But right now, my views literally are just bullish on gold. But initially I was actually expecting a break above here, a pullback, then I go long on gold. I'm just very fortunate that Trump said what he said that night when he talked about when he added more pressure on Fed Cook resignation and everything, which kind of like just caused this very intense pullback around that 2 a.m. Nigerian time, and the market just rallied up. And after that, there was another pullback that we tested this particular region that I took. So that just makes everything make sense. And I share with a few of my friends. I think some of them also took it, and some bit. All right, so this is what it is. The market, people just to do what they want to do. It is what it is. So, anyways, right now the plan is plain and simple. Pull back to 33.80. All right, or a break above here, and a pull back to this particular region, we get a new high. Okay, we get a new buy from these 2 regions. Okay, if that happens, especially this one right here, I'll probably buy some more of gold myself. All right, and that's that. On Bitcoin, I'm shorting Bitcoin. I took a fresh new short yesterday night before I went to bed. All right, I'm talking about Saturday. All right, I took a short right here, and this stop loss is just wild, but it is what it is. I took a short here, I took a sell here. So I'm anticipating for a retest of that 105k. Okay, to get the retest of that, I'll probably close out these positions. But I mean, 100k is still also in view. Okay, you can see Bitcoin at 100k. So pay close attention to that. After this, we have heard and researched that there's a high possibility of another bull run or a bullish rally of maybe an increase of maybe 20 to 30% again, and then we're going to get that sell off probably to 60k or whatever. I don't know. But for right now, where I'm at right now on Bitcoins, potential short. Okay, a short grab to this particular region. Okay, 105k. If it's beaten, then we get 100k. If that's beaten, oh boy, then we have 90k. And then the return of or a retest of this 125k will now become very bleak. Okay, because the more it dips, the harder it will be for Bitcoin to actually give us that 140k, 130k, 150, 60k that the market or everybody has been forecasting over the past couple of weeks now or months. So the lower it goes, the more harder it gets, and probably it's going to give us some opportunity before the whole sell-off start happening. Okay, I'm talking about the bear market. Before they start happening, we need that opportunity for the altcoin to also do their own rally. And we see how it goes anyways. But right now, I'm just holding a short on Bitcoin and Ethereum. Okay, I'm also shorting Ethereum. Ethereum is kind of just dramatic right now. It's just dramatic. I only have one position on this one. I mean, I'm not a fan of Ethereum to holding multiple positions. So let's see if this is going to come back down. All right, so that's just that on Ethereum. I see it coming back down to 148 though, 4,800. No, excuse me, 4,020. Apologies for that. 4,020. Okay, if it comes back to 4,020, then maybe we're going to get a push to the upside from there. Anything outside of that, then it's coming back to 3,600. Okay, 36 is the next target. And I will buy. Don't forget, in my spot position or in my spot portfolio on Ethereum, I bought here, and some time ago I also bought here. Okay, these are the 3 buys I took, okay, on Ethereum, and it's been fabulous. Especially this one, it's been really fabulous. I don't think we're ever gonna get 1,005, 1,003 of Ethereum ever again. If it does happen, that would be very suspicious. Maybe the market will just crash, but I'm not sure. So let's pay attention to that now. So those are my trade recommendations. Those are my open positions. I think we did it together, like I said earlier. So I will see you guys in the next one. On Eurchf, I said I want to talk about Eurchf. Let me just wrap up with Eurchf. I'm pretty bearish on Eurchf. The first trade I took on Eurchf, it was sweet. Let me take it to 4-hour time frame. The first position I took on Eurchf, it was sweet again. It was very good, 1:1.7, 1:1.7, yeah. It traded me out right here. Now I'm anticipating for another short. Okay, possibly if I get a candle that close below here, I'll probably sell all the way down to this previous low right there. All right, but anything outside of that, I'll probably just watch this. But I'm not going to sell right here. I don't see any sense in that. I'll probably just wait for the candle to close below here. And then engulfing candle, even though that can even still go back and close me out in a loss, but I see a more potential all the way to the downside if I get a candle that close below here. Right, on the Usdjpy. Why do I say that? Because of experience. I've seen this happen time and time again. All right, it has always happened like that. So I'm just trying to capitalize on that and see how I can make the best use of that knowledge that I've had on Eurusd. So guys, I'll see you in the next one. Please don't forget to subscribe to my YouTube channel. Don't forget to follow me on all my social pages. Please trade safe this week. And may the stars and the God of the market protect and guide us and see us through above all. I'll see you in the next one. Have a good day. Bye for now.